Hello and welcome to the first chapter of the Banker Masterclass series, Getting FinTech Right, in association with PPF Group. I'm Kimberley Long, Age Editor at The Banker, and I'm joined by Jan Cenkr, Chief Information Officer at Home Credit, to discuss the role of the traditional bank. Thanks for joining me, Jan.
Hi, good morning. Happy to be here.
Traditional banks have a solid position in the banking world thanks to their long-term operations and consumer recognition. What are the advantages of a traditional bank?
One of the biggest advantage of traditional banks is, of course, knowing their customers. As they've been on the market for a very long time, they have the history with their customers, and they can, of course, use it to their advantage. Although when we look at the newcomers on the market in the fintech world, they have advantage compared to the traditional banking sector in a more sort of technology-driven driven process, whereas traditional banks are usually process-driven, whereas the new fintech banks and companies that emerged on the market are more technology-driven. Therefore, they always try to look at the gaps on the market to make sure that they address those gaps, whereas the traditional banks are more rigorous in their processes. Therefore, the changes they implement are on a much slower scale.
As banking regulation is frequently updated around the world, how have the traditional banks adapted to this challenge?
Like any other sector with regulation, all players on the market, they have to adapt to the new regulations as quickly as possible. With the banking sector, the regulations are more and more stricter, particularly in Europe, where we see introduction of more data protection laws, more customer-centric regulations that are introduced, and all the banks, and not only banks, also the fintech sector and the companies who operate there, they all have to adapt very quickly. It is usually quite a long process, as most of the systems that are used in the banking sector or the fintech space have to be adjusted, and therefore it always takes a bit longer than we would like to have. On the other hand, we have to adhere to the regulations. Therefore, all of the banking sector will continue to adapt the regulations as they are introduced, and they will continue to be introduced going forward. So there will be always a space for innovations in that area as well.
What is the future of traditional banks? How are they going to continue to be competitive in a crowded banking sector?
That's an interesting question. I think, at least from my point of view, I see twofold answer to that. In the more sort of traditional markets like the US and Europe, I think that the traditional banking has a bright future, as those markets are very slowly changing towards the fintech and the cryptocurrency platforms. Whereas on the emerging markets, where we see, particularly in Asia or other parts of the world, I think the traditional banks will be under scrutiny from the fintech and the cryptocurrency platforms, because people don't want to bank through the traditional banking. What I see, particularly in Europe, I think the transition towards more, let's say, new technologies, like whether it's Bitcoin or Ethereum platforms for the cryptocurrency exchanges, will be much slower. And we see that, particularly in Europe, the European Union Commission is trying to sort of regulate that sector, which will not help with the switch.
Thank you for your insight, Jan.
Thank you for having me.
In the second chapter, we will be looking at digital banks and their evolving relationship with traditional banks.